Passive income is all the rage these days. You see YouTube videos showing people driving exotic cars and claiming all you need to do is start a dropshipping business. Not passive income. Start a YouTube channel. Definitely not passive income. Build a real estate empire. Not easy or cheap. Or just start an Amazon affiliate business. Not passive income. In this video, I will define for you exactly what passive income actually is and the huge problem with how passive income is portrayed in social media these days. Do you actually want to make passive income while also not investing hundreds of hours every single month? In this video, I'm going to share with you 5 truly passive income investments you can purchase today, starting with just $100. Let's do it. Before we get started, guys, make sure to hit that subscribe button below. It's free to do and it keeps you up to date on all the videos that we do on this channel. We cover all things personal finance and investing for the average Joe out there. Everything from dividend stock investing to Vanguard index funds to Fidelity index funds and all things personal finance to equip you with the tools that you need to win with money. So what exactly is passive income? Passive income is income that requires little or no effort to earn on your behalf. It's income while you sleep, while you travel the world, play video games all day, and everything in between. So what's the big problem with social media portrayal of passive income? Well, first off, the ideas that many people throw out there on social media are not foundationally passive in nature. What they really mean to say is, it takes a lot of work, maybe even a lot of work up front, but it does require work. It doesn't mean that these ideas are bad. They are just categorically not passive income. Honestly, no income source though is truly passive. You truly cannot get something from nothing. Any great passive income source involves some work. Sometimes it takes a lot of upfront work and then it can be passive in nature from that point forward. But usually at a bare minimum, it requires a little bit of research and due diligence before you have passive income. So you can definitely take the route of investing a lot of your time to hopefully create passive income in the future. And I guess that's kind of what I'm doing with my YouTube channel. But instead, a better and maybe even more faster way to earn passive income is to purchase a passive income investment. So let's go ahead and talk about 5 different passive income ideas that you can get started with today for as little as $100. So the very first passive income investment that I'm going to start with here is the one I know the most about, the one I have the most experience with, and that is dividend paying stocks. So what is a dividend paying stock? Dividend stocks are companies that you can own shares of in the stock market. And these companies are successful. In fact, they are so successful that every year they generate so much cash that they look around and say, holy smokes, where am I going to use all this money? Now, some companies that are still in hyper growth mode are able to take that capital and reinvest it back into the business and grow the business even further. But for most companies out there, they can do a little bit of investing back into the business, but they're still left with a lot of cash. And what many companies end up doing is they pay a dividend to their shareholders as a reward for saying, hey, thank you for investing in our company. And some of these companies have a long and established track record of paying a consistent dividend every single quarter of every year and increasing that dividend every year for a long time. With some companies, it's as much as 25 to 64 consecutive years. The dividend yield is the percentage of dividends that a company pays as compared to their stock price. And it's not very difficult right now, even with COVID-19 happening and the stock market reaching new highs, to find a dividend stock paying anywhere from 3 to 7% every single year on their yield. Just as a quick example, we've got AT&T, ticker symbol is T. And AT&T currently pays an annual dividend of $2.08 per share, and the current dividend yield is 7.13%. Another example is Walgreens Boots Alliance. Ticker symbol here is WBA. Walgreens Boots Alliance yields 4.13% on their dividend yield, and they pay an annual dividend of $1.87 per share owned. I'll tell you what, that's a whole lot better than the 0.01 to 0.1% you might be earning if you kept your money in a savings account with your bank. Investing in dividend paying stocks does require a little bit of research though. You want to make sure and look at a dividend stock's metrics such as their sales growth year over year, and looking as well at their dividend yield and their dividend payout ratio, which is the ratio of their dividends paid as compared to their overall profits earned. That's the standard measure of the dividend payout ratio. And you also want to be aware of their dividend growth rate. How much are they increasing the dividend every single year? Some dividend stocks have a great yield right now, but they don't raise their dividend like ever, or they raise it by 1%. Whereas you've got other companies that might be yielding, let's say 3 or 4%, but they're growing their dividend 10% every single year. You also need to be on the lookout for dividend yield traps, which is what can occur if a dividend stock is performing poorly and their stock price is going down, which inversely is connected to the yield. So as the price is going down, the yield is going up. So you might see a dividend yield that looks really great, but it might be indicative of a company that's performing poorly and might be going out of business in the near future, or at a bare minimum might be cutting their dividend in the future, which is something that's always a risk. But then again, sometimes the market goes down as a whole, and that brings some really great dividend stocks down in price as well, which could lead to more attractive yields for long paying dividend stocks such as McDonald's or Procter & Gamble or Johnson & Johnson. If you want to learn more about how to pick great quality dividend stocks for a dividend stock portfolio, make sure to click on the link in the description below at the end of this video, or you can click on the end screen at the end of the video as well. I've got a few videos on this topic you can watch. Okay, passive income investment number 2 that I want to share with you is what are known as real estate investment trusts, also known as REITs. As you're well aware, owning physical real estate can be a very difficult investment to get into due to the large upfront costs involved with getting a down payment and closing costs, etc. Thanks to real estate investment trusts, though, you can own physical real estate for as little as $100. So what exactly is a real estate investment trust? A REIT you should think of as kind of like a mutual fund for real estate. A bunch of different investors collaborate together with the same shared common interest of wanting to own real estate, and they invest through a management company that specializes in real estate. And that company then goes out and purchases different types of real estate properties with the money that is collaborated by the investors. And then with those properties, the real estate company collects rent and actually buys and sells properties for a profit potentially, and all of that profit comes back to the shareholders. In fact, real estate investment trusts receive preferential tax treatment, wherein they can bypass the corporate taxes that are usually imposed on most companies, as long as they pass on at least 90% of their taxable income to their shareholders. There are so many different types of real estate investment trusts you can own. You can own an apartment real estate investment trust. You can own single-family home REITs, nursing home REITs, commercial real estate REITs, bowling alley REITs. I'm not sure if there's exactly a bowling alley real estate investment trust, but I bet you there could be. And every other type of REIT in between. Most REITs will pay a yield of around 3 to 8 or 9% every single year, which can be a great way to diversify your portfolio for passive income, as well as own real estate with a very low entry cost. Now, there is a downside to REITs because they are all inherently based on real estate, and real estate is a sector of the economy that is cyclical. At times, real estate can be down, and that can lead to poorer performance in your real estate investment trusts. Do you have any interest in looking into some great real estate investment trusts? Here are 2 that I own in my own investment portfolio. First one here is Realty Income Corporation. Their ticker symbol is O as in ocean. They pay a monthly dividend. Their current yield is 4.78%, and they pay an annual dividend of $2.81 per share. They have raised their dividend every single year for 28 consecutive years. They invest in many different types of real estate as well. They own properties that have tenants for Walgreens, 7-Eleven, Dollar General, FedEx, Walmart, Home Depot, and more. Another REIT that I own in my own investment portfolio is Store Capital Corporation, ticker symbol STOR. They pay a dividend 4 times a year or quarterly. Their annual dividend is $1.44 per share. Their dividend yield, 4.59%. They have raised their dividend 6 consecutive years, which is how long the company has existed. They have 511 customers in 49 different states, over 2,500 properties with a 99.6% occupancy, and that's during COVID-19, which is a really great metric. All right, passive investment number 3 here is what are known as Master Limited Partnerships, or MLPs. A Master Limited Partnership is a special type of company with a particular emphasis in investing in chemicals, mining, pipelines, natural gas, etc. They are similar to REITs in that they have preferential tax treatment, but it's actually even better with a master limited partnership. If you have ownership in an MLP, you are a partner as opposed to a shareholder. And at the end of the tax year, you're not gonna get a year-end 1099 DIV. Instead, you're gonna get what's known as a Schedule K1 because you're a partner in the company. And the dividends you would normally receive from a normal stock company are known as distributions with a master limited partnership. One of the reasons why you might want to invest in a master limited partnership is due to preferential tax treatment. And by that I mean deferred taxes. This actually would be really great for somebody with a high income or a high tax rate. With master limited partnerships, the distributions you receive are not taxable in the year that you receive the distribution in most cases. Now, we're talking about taxes right now, which means that please see your tax advisor. I'm not a CPA, I'm not a tax professional, but I have learned this from myself, and I'm just giving you general awareness on this type of investment. Your distributions are generally not taxable in the year you receive them. Instead, they result in a lowering of your cost basis in the investment. For example, let's say you bought a master limited partnership for $25 a share. So your basis is $25 a share. If the stock goes down or up over time, it doesn't matter, your stock basis is $25 a share. Now, let's say you get paid a dividend $1 every single year as a distribution. So every time you get that distribution of $1, your cost basis goes from 25 down to 24, and then 24 to 23, and 22, and 21, all the way down to whenever you sell the stock, or you get down to 0. If you get to 0, you'll start paying taxes at the time you get these distributions. But eventually, when you sell the master limited partnership, at that time you will have to pay a capital gain, and that will be whatever the cost you sold it for minus your cost basis. So you might end up having a larger taxable event down the road. Now, master limited partnerships are known for having a really high dividend or distribution yield. One particular master limited partnership that I own in my own portfolio is what's known as Westlake Chemical Partners LP, ticker symbol WLKP. This is a limited partnership formed by Westlake Chemical Corporation to operate, acquire, and develop ethylene production facilities and other qualified assets. By law, remember, they're required to pass through to their partners 90% of their taxable income every single year. So Westlake Chemical has raised their distribution yield every single year for 7 consecutive years, and their business metrics have been unaffected by COVID-19. They currently pay a quarterly distribution, and this year it is $1.89 per share, with every share costing $22.49 as of January 18th, 2021. That's a dividend yield or distribution yield of 8.38%, much higher than what we've talked about with dividend stocks or real estate investment trusts. As I mentioned earlier, tax filing might be a little bit more difficult and even cost a little bit more to prepare given a Schedule K1 versus a 1099 DIV, so just keep that in your awareness. But master limited partnerships can be a great way to collect passive income. All right, passive income investment number 4 here is what is known as business development companies, for short, BDCs. Now, a BDC is a company that specializes in lending money to small businesses and even startup companies. These companies may not be able to get a bank loan yet, so they are willing to pay a higher rate of interest to borrow money. That's where business development companies come in. A business development company will step in and lend money to these companies to grow their businesses, and they will collect a higher rate of interest than a normal bank loan would achieve. The interest paid back to a BDC is then passed on to its shareholders. Because this income is based off of a loan to a company with recurring interest payments, it's a very stable form of payment. A BDC, like the other investments we've talked about today, can bypass the corporate tax rate as long as it passes on at least 90% of their taxable income each year to their shareholders. In my own investment portfolio, I have one BDC that I own, and that is Aris Capital Corporation. ARCC is the ticker symbol here. And they are invested in 347 different companies across the United States and across many different sectors of the economy. They currently pay an annual dividend over 4 quarterly payments, and that annual dividend is $1.60 per year currently. Their share price is $17.20 per share, which leads to a dividend yield of 9.3%. That is the highest one we've talked about so far. Now, that should not be evidence for you to load up on BDCs and master limited partnerships just because they pay a much higher yield, because with the BDC, you still are reliant on the underlying businesses performing and being able to pay back their loans. If that were to falter on a large large scale that could affect your future income from this company. Passive income investment number 5 here is a little bit off the wall. It's the only one that I'm going to talk about that I haven't done myself, only because it's not really a good fit for our family, and that is to Airbnb or rent out on a short-term basis a room in your house. Now, like I said, if you have a large family or a family at all, this might not be a good fit for you. However, if you own your own home and you're single, or you already have a roommate, or potentially maybe you're renting and you've got a very hands-off landlord or a landlord who's very open-minded, you might be able to rent out a room in your current as like a sublet of your current rental home. The amount of rent that you can collect from a short-term rental is generally larger than you would receive as a percentage of every day than you would have a rental property. I've seen other people who have been able to house hack their way or rent out their homes and be able to live rent-free or mortgage-free based on the income they generate from a short-term rental with Airbnb. It may require a small investment to maybe clean the room or clean the house or make certain investments in a specific area of the home to make this possible, or just taking one of the rooms in your home if it's not being utilized to rent it out here. But it takes very little effort to run the Airbnb side of the business and to make bookings and reservations. A great option here, one that I look forward to doing at some point in the future when I have the ability to do so, but right now, like I said, not a good fit for our family of 6. So there you have it, guys. Passive income investments that you can purchase for as little as $100. Some of them are actually free if you factor in Airbnb or the small amount of maybe upfront capital to prep a room or manage it on an ongoing basis here. Passive income, truly passive income, does not require much effort at all. If you want to invest a bunch of hours and time in building a business that can eventually become passive, maybe a YouTube channel that requires very little effort, which I've yet to see so far, then by all means do that. But if you're looking for a quicker path, maybe a more simple path, there are some very basic passive income investments you can purchase with your hard-earned money that can grow in the future. Make sure to leave your 2 cents in the comments below. Which of these passive incomes do you currently own? Which ones are you thinking about trying out for your own portfolio? And make sure, if you haven't done it yet, hit that subscribe button below to see more videos from my channel. And on this channel, we talk about investing for the average Joe. We talk about dividend stocks. We talk about investing in index funds with Vanguard or Fidelity. We talk about all things personal finance that affect people like you and me, the average Joe. If you want to learn more about picking dividend stocks, then you should check out these videos right over there.